Hello, everyone, and welcome to the live stream. Welcome, welcome. Please let me know if you can hear me in the chat below. I want to make sure everything is running smoothly here. You are watching the India pre-market live stream, a PivotBoss event. I am Frank Ochoa, aka PivotBoss, author of the book Secrets of a PivotBoss. I'm very, very excited here to join you this morning for a pre-market live stream. I want to keep this nice and tidy. I want to make this 35 to 40 minutes maximum, give you the information that you need to start your trading day the right way. And we have a ton of charts to get to, starting with the market indices, and a lot of the charts that you all have recommended over the last several days. So from last week, you all asked for a live stream for your Indian markets, and the response was overwhelmingly positive. So thank you very much for the amazing engagement, for all the love and support that I'm getting from traders all over the world, including from India. Thank you very much. I'm looking forward to providing a tremendous live stream for you here this morning for your pre-market preparation. And without further ado, let's go ahead and get started with your pre-market video or pre-market analysis here. The first thing that we're going to start off with here is the Nifty 50. The Nifty 50 right now is showing tremendous movement right now. Let's move that over. There we go. And what you see right now, again, is a market that has seen tremendous movement over the last couple of weeks here. That wide range of price action right there was tremendous. The widest 3-day range on record here in a long while. And what the market tends to do following that is compress. So we've had some compression here near the middle of this range. And for today, and tell me what you think here in the chat here. Are you all day traders, swing traders? How would you classify what you're looking for right now? We're going to be looking at a little bit of everything, a little bit of swing, a little bit of day, but trying to give you the levels that matter. And it starts with the framework. And the framework is the market structure levels that are most important. What market state are we in? Range bound, trending bullish, trending bearish. Once we can identify the state we're in, then we can identify what type of participant we want to be in that auction. And right now, we saw a tremendous rejection here in the Nifty. The Nifty 50 here going below the previous session's low, seeing a rejection at those levels, and then going outside day up. That was a tremendous move here on a Monday. And this is one thing we talked about heading into that pre-market was lower value relationship. Everything would suggest a continuation down. But order of operations is very important. If you go down first and reject, it could be a thrust reversal that takes you back into the previous session's range. We saw that. And the fact that it closed outside day opened the door to today's checkmark continuation. Beautiful, beautiful checkmark continuation today in Nifty. So what that provides is another checkmark continuation potential for today's session. You have higher value relationship heading into the session, a bullish close. So that would mean a pullback early would be a buying opportunity for a continuation up. That's really what you're looking for. Now, how far do we pull back? From an intraday perspective, perhaps we only get back to about 25.7, maybe a little bit lower into the previous session's midpoint. That would be about the 665s to about 700. Do we get into that zone? Find rejection. That could be a buy opportunity for a checkmark continuation up. Again, order of operations very important. If we go up first and reject, now we're getting a thrust back down into the previous range. So it's very important. If this is going to be bullish, you want a little bit of a discount early in the day, followed by a continuation to the upside. That's the thought here for Nifty from a near-term perspective. So to begin the week, very bullish, nice and strong here, but you're still trapped within this range right here. That's the range right there where you're seeing a lot of back and forth. We can come back up, we can drop back down. This market is kind of building energy for the next move. and the edges are very clearly defined. You can see the 26.4 up top, the 24.6 down below, and then the middle zone at 25.4. And that's basically your range. And if it fails here at 25.4, you open up the lower market structure. Staying above that level keeps you in this upper market structure. So right now, flowing to the upside in the near term. Bank Nifty doing the same thing, but looking a little bit more bullish. So here you can see how that was an outside day as well. Very, very strong reversal back to the upside. Was that a thrust reversal as well? Let's see here. There's your thrust reversal buy signal right there. We talked about these thrust reversal signals after selling pressure. You got that down day, failed new low, thrust reversal, outside day up, tremendous strength. Now, again, whenever you get a solid bullish continuation day like that, the next day, check mark down and continuation up. You can see here's the open, a little bit of a pullback on the tail, and then you finish above the previous highs. You finish on new highs, higher lows, day over day. That's bullish. Short term for a small little check mark continuation. The problem now becomes what happens when we get a little too high here. That's been clear rejection, clear key range that is developed here. If we come into that zone, do we start to find rejection back into the range? So wider ranges have developed. And when you have, again, that wide range, those are the edges. That's the playing field, this side and this side. And you're fading the edges back and forth until this thing can find acceptance outside the range. So again, Bank Nifty, a little bit of a check mark continuation could be in play to begin the day. But watch the previous session's high. Any strong rejection, and you're dropping back down within the range. Now, if you're looking at Sensex, this one has also seen tremendous 3-day range, a new key range here. And just like the others, outside day up, a nice little continuation. And we're looking for a similar checkmark continuation. Could be a low range checkmark continuation. We can use our ADR indicator down here to kind of look at average range over the recent period of time. That would tell us we're looking at 600 points there on 5 and 10 day range basis. So can we get a 600 point day or thereabouts, 5 to 600 points? So if you find the morning low, 5 to 600 points up. If we start the day with a strong rejection on the highs, 5 to 600 points down. So order of operations very important there. But again, large 3-day range, super expansion leads to super compression. And here's your compression. So got to trade within the smaller structure for now at the very least. Nifty Next 50, very strong as well. And I'll get to some of the comments as well. Thank you for some of your flow. I can see here that intraday trading, day trading, swing, and a little bit of both. That's great. That's great. It's nice to be able to mix it up. It's nice to be able to engage the time frame that's providing the movement. Sometimes the day time frame's not providing it, the swing might, and vice versa. Sometimes you're too pricey in the charts, too high, and you don't really, want to press it at those highs. It could be a digestive day right before it falls back down. So again, you want to be mindful of the extremes, do business at the right spots. And this is something here where Nifty Next 50 here is still hanging out near the upper end of the range. We're coming back up to fill the gap here. Nice little 2-day continuation. Like we said, it should be a checkmark continuation framework unless order of operations, unless you get a rejection at the high, and or we always need to know where we're wrong, where the idea is wrong. The midpoint is that day as well. So if we start dropping through the previous mid, that's an indication of a sell side bias heading into the previous low. So we will see how this thing opens up. Based on the markets here, a short-term continuation up as of right now, but starting to get into the upper portion of the range. That's where rejections can occur. So got to be mindful of that. Now, near term, if we drop into the lower time frames, this is what I want to show really quickly here. let's go and use, yeah, let's drop down. I'm going to do the daily here. I'm going to bring that off right there. And then this is the one where we're going to go day for right now. And let's drop this to a 4-minute time frame on Nifty. Here we go. So this is your 2-day structure right now in Nifty. We dropped early to begin the week, and then you check marked up. Then the next day, today, or yesterday rather, before, you pull back, check mark again. And now as we head into the new session here, do we do a similar check mark in continuation? That's the thought right now, if this thing can find some strength. If you look at the weekly VWAP and bands right now, everything is kind of sloping up. So if we look at the structure for the day, a couple of things to look at is your previous session's high and low, most important levels, and your previous session's midpoint. But if you look at the overall flow of VWAP, that blue dotted line right there is weekly VWAP. Look at the slope of weekly VWAP to begin the week. That would suggest that any pullbacks are buying opportunities with an upward bias until proven otherwise. And proving otherwise would be basically taking VWAP offered and failing to establish acceptance above that level. So right now we're trending up. Pullbacks, buying opportunities as we continue to trend higher. And we could be looking at the next buy the dip opportunity for a continuation to 25.8, perhaps a bit higher. So an upward bias on the weekly bands. By the way, these bands right now, these are the PivotBoss Bands Pro Indicator. This is going to be released to our PivotBoss Masters members Sunday evening. And we're going to do a 5-day live training on these bands next week. So if you are a part of PivotBoss Masters as a member, you pay once to become a member, and everything else is yours included. Anything past, present, and future is all yours at no additional cost. And the newest tool we're releasing are these bands right here, usable in any time frame. So if we look at the higher time frame with these bands again, let me drop this here, and then we can make these go back to, say, 3-month. We can go 3-month bands like this. These are now quarterly bands. And this helps to show you over and under valued areas, and it shows you value. So if the blue line is value and price drops way down to S3, S4 territory, you're now 3 to 4 standard deviations below value, and a rejection there would tend to snap you back to value and perhaps across the range toward the upper portion of value. That's exactly what happened here. When Nifty dropped a little bit too much over here, look at it dropping into the S3, S4 territory. That's the magic zone right there, especially when you have relatively flat bands or you have a relatively trading range market here. You go away from value a little too far. You're stretching that rubber band. You let go of one end of the rubber band, and it snaps back the other way. Tremendous right there. These are our pro signals right here as well. Further confirmed compared to the normal signals. Really, really sharp stuff here. If you look at Bank Nifty here, this is the top right there, right at R3, R4 in that territory, and then drops right back toward value. The lower end was very, very close here. Sensex, look at this right here. Those are your buys. You have one here as well. What's the difference between this one and this one? At times it's the slope. It's the preceding slope. It's the style rejection. You know, how strong is that rejection? It's about where price finishes against the rejection lows or perhaps the midpoint of the rejection day. This one did not fit the bill compared to, say, how this thing reacted here. Much better, flatter bands here. So at times we just have to measure what matters here. If there's too much slope, got to go in the direction of the flow of the market. So very, very good, powerful bands here. Now, one thing I want to show is some of the stuff that's popping up here, whether it's band related or not. There's some really good potential opportunities brewing in these markets right now across the board. HDFC Bank here, really, really great potential out of this one. Now, this one has an inside day right here. So an inside day is an energy buildup phase. You can see right here 53% of ADR. Anytime you're below 65%, you're compressed. And compression can tend to lead to expansion. So you see a small day like this leads to a big day like this, ideally. After, okay, this is great. Let's really dig in here. Because, let's see here. Yeah, I'm going to take this off right here. Let's really dig in on HDFC here, because the potential of this one is for a big time rotation back up. 950 could be in play short term, like over the 1 to 2 days. You have an inside day compression. This right here, if you ever pay attention to massive selling pressure, and then you have a super high range day like this, and it closes on the lows, you have a big tail behind it. That's highly bearish, right? Normally. Now, if you follow that day with another session, the next session, and you close beyond that mid the way you do here, that is a tremendous failure of that selling pressure. Any late sellers that came into the market there are now trapped. And the thought there is that those late participants who are short must now buy to cover, and that forced buying leads to a short squeeze, and that's the type of day you get here. Once you're trapped like that, it can tend to squeeze quite a bit more. This looks like a powder keg here, and really, quite honestly, whichever way we go out of this narrow range could be a good day trade in the direction of the breakout, but right now things are looking up. I would say if you're looking at HDFC for today, a couple of ways to go. It could be a deep pullback followed by a check mark and a breakthrough multi-day highs and a continuation up. That would be super bullish. If we hit the prices below the previous session's low, that could still be a trap. So it could be a drop below the previous session's lows. That could be the most bullish opportunity to trap and reverse for an outside day up. Look right here. Similar right here. You have that narrow day, failed new high, outside day down. Same thing here. If we drop, failed new low, outside day up could be in play. So this looks tremendously bullish. If we drop down to, let's look at a 4-minute chart here. Here's your 4-minute time frame. Look at the amount of compression in HDFC right now. Super compressed. Major breakout potential out of this one up ahead. It could be significant. If you look at the recent structure, very much inverted head and shoulder style structure, that would also suggest perhaps an upside break. And any pullback, again, could still be a buying opportunity for an upside break ahead. So this is looking really good if you are a follower of HDFCBANK. This one could be significant here. Let's see. Let's take a look at another one here. And I will bring back the bands on this one like this. Bring up this here. This is a CC Bank here. This one looks quite a bit different than, say, HDFC. This one has rallied recently, has stayed well within this trading range that spans 1440 down to 1320. You have a mid zone around 1380, and that's the range. This one looks a bit different compared to HDFC. If it does break through 2-day highs, perhaps it can participate here, but I really like HDFC so much better, especially after the stretch, after the push through that rejection day midpoint, the whole day. This looks great. Really like that one. And then I was looking at SBIN, State Bank of India. Look at this thing just ripping to the upside in a big time way. Notice how the bands are sloping upward. When they're sloping upward like this at such a pace, you don't tend to pay attention as much to the sell signals there. You can filter those sell signals with our bands as well if it's too powerfully bullish. Again, in a trending market, it's best to buy the dips in the direction of the trend. So right now, with the big time push up here, it's had a massive swing to the upside. I would say this has a shot to fill back in and then be a buying opportunity again, but hard to fade this strength. So got to kind of let it do its thing a little bit there. Now, a big one here that a lot of folks have really asked about is Infosys, INFY. That is a big time market mover here in the news right now. You had some headline risk here, or a headline event here with the India AI summit there. You have INFY partnering with Anthropic, which is the maker of Claude AI. Claude, a tremendous AI, and this could be significant. And you can see the pop that we're seeing a little bit right now. One thing about Infosys right here, if we look at the yearly bands here, I love the way this thing dropped to the max S3 on the yearly bands. And look at the fully qualified buy signals that you're seeing there. These are the pro signals that we offer. Only our PivotBoss Masters members have these signals. What this does, we've had our normal signals forever. These signals are a multi-layered confirmation engine here that uses volume. It uses buy-side delta in this case, and a combination of those in order to show a sensitivity on the strength or weakness of the signal. And as it progresses, it gets stronger and stronger. So to get that type of response at the S3, S4 zone on the yearly bands is about as good of a discount as you'll get. When you look back at the historical bands here, right here, you can see we've also had rotations off the S3 band in the previous years. This is 2024, this is 2025, and now 2026. And each time it hit it, months later, we were on highs. Are we rallying again off these levels? So again, very, very big discount here. Whenever that happens, you want to see higher lows develop, and then you want to see this thing kind of rotate back up. So big time potential here. And the team up with Anthropic is big, big news. It really is. The way that they're teaming up is really showing the different stages that AI is going through, and this next stage could be significant. It's replacing human work right now, which is going to be huge for bottom lines in the near term, bottom lines in the far term as well. Could hurt a little bit near term, bigger profit potential down the road. But for the most part, this is huge right here. And if you look at TCS, another of the big tech titans here, this also had a similar move. Massive sell-off here. And then you had the drop into S3. Now this shows you the power of the bands. I created these bands almost 20 years ago. I've continued to improve them over time. It's been my proprietary calculation that drives the standard deviations. It's not your normal standard deviation calculation. Additionally, the way they're spaced out here is my smoothing approach that normalizes the bands instead of seeing, kind of your bands normalize out this way. And right here, why did that participation happen there? Why didn't the buying happen here or here? It happened at 3 standard deviations below value. That's where institutions are primed to really get in and buy the discount. So these bands are showing you where the institutions are looking to really jump in big and influence price back up within the range. So these are big time zones right here. Just because we bounce here like this doesn't mean they have to carry on. Anything can happen moving forward. Anything, headline risk wise can happen and we can fail. But over time, it's probabilities playing out in your favor. If you have a D-shaped profile and you consistently buy below value and return to value over time, the probabilities work out in your favor. And that's what this is. It's identifying good, high probability zones where if you stretch the rubber band too much, it can snap back the other way. Okay, real quickly here. Now that we're talking a little bit of bands, I do want to provide an offer for you right now. Let's go ahead and show this at the moment. If you go to pivotbossmasters.com/live, you can learn a little bit more about our Pivot Boss Masters training and the upcoming training that we're having next week. You can get access to our bands, the Pivot Boss Bands Pro indicator, in addition to all the other pro tools we have. Tremendous proprietary tools. And I don't do this very often, but for you all, this is an India specific live stream here, but anybody can participate. If you're thinking about doing Pivot Boss Masters here, there's no better time. It's a one-time fee and you're a member for life. Any previous tech and training that we've provided is yours immediately, and any future training is yours as well, including training like what we have coming up next week. And lastly, to make this nice and quick, one thing I do want to do for you all here is provide a coupon code. So let's do that here with this code right here. So if you use coupon code India at checkout, you're going to get a discount here. So if you go down here to that pivotbossmasters.com/live page and hit the button to jump on the training, hit the coupon code India and you will get $100 off of the fee. And of course, that coupon code is good throughout the rest of the week until Sunday night your time before the training starts. So if you want to take advantage, use that coupon code and you'll get squared away. All right, let's jump back into the charts now. The charts here, we're going to look at Reliance right now. Reliance here, Reliance, a big time bellwether for the Indian markets here. Big time movement. One of my favorite indicators is the Pivot Boss Pivots indicator. Pivot Boss Pivots. Now, in my book, Secrets of a Pivot Boss, obviously I talk Camarilla pivots and floor pivots. And I've done a lot of research, a lot of data mining, a lot of work on pivots. And my Pivot Boss pivots are my favorite. They're just my favorite. It really gives you the information you need to know and the great opportunities for reactions or breakout and price discovery. In Reliance, we had a strong rejection at the high, a rotation to the low, went outside quarter down, and then saw a tremendous rejection here that popped prices back up. Really great movement against those extremes. Anytime you're rejecting the previous low, you're looking for a snap back to the previous midpoint. There it is. You reject the previous high, you're looking for a drop into the previous midpoint. There it is. And then you have a shot to continue across the range. It keeps you on the right side of the markets. And in Reliance right now, with this big pop here and a pullback, you now have yourself a new key range. You have yourself an inside day today. Which way are we going to go out of this range? This is going to be interesting. If we start higher out of this range, it could be a nice little solid continuation. If we start failing, what does that do to the broader market here? This is going to be one to watch. Nice inside day here. Now, one thing that I mentioned before in a previous video here was how this one played so perfectly off the Pivot Boss bands just yesterday. Look at this move right here. This is a drop below the previous low. Bam. Look at the drop into the S3 band on the intraday bands. Perfect signal, rotation to the midpoint. That's your scalp. Whenever you have a rejection at S3, the scalp trade is to VWAP. The day trade can be across the range to R3. If you're trending up overall, like say day over day over day, then pullbacks are buying opportunities for a continuation up. If you're trending down, any bounce is an opportunity to sell it for a move lower. So this was a down move. So usually you're looking to sell. But then we had a tremendous rejection at prices below the low, and then it bounced and trapped. What a great move in Reliance off the 4-minute bands. This time, however, look at Reliance. R1 S1 standard deviations, very narrow compression. This right here could set up a breakout move here today. And like I said, if you start pushing to the upside, did we get a rotation to recent highs here? 1440 could be in play. This inside day is providing some juice for a potential breakout. That's Reliance. And looking at the chat. Looking at the chat here, let's see. Thank you for that. Good to see you, Sai. Going way back. Appreciate the info there. MSP, that is awesome. Great to see you there. MSP says Frank has a super concept as trade sequence for understanding this kind of bar by bar study. That's right. It's called the Swing Trade Pro 2.0 training. Bar by bar concept that really helps you identify all the actionable spots in the chart. Yeah, it's really, really powerful. Thank you for that. And this is great. This is great. I appreciate all the fantastic feedback here, and I'm very, very happy that you're enjoying this content right now. Again, there's so much to get to, and I could do so much more here. So it almost feels like drinking water from a fire hose here as we continue to look at some of these charts. Now, I want to jump on to a few momentum stocks here. Let's look at some momentum stocks. Let's look at the daily chart. And I want to look at Tata ELX SI. All right, this is right, Tata Elxi, if I'm saying that right. I'm learning some of these names. This one is at a tremendous spot as well. If we look here at the daily, let's go back to yearly bands. Okay, these are the yearly bands now. The PivotBoss Bands Pro set to the yearly bands. And one thing you'll notice right now is that the recent drop here in this in Tata E is that drop into S3 and the reaction we're seeing right here. Look at the pop to the upside. Look at last year right there. That's also at S3 and a big pop to the upside. At the end of the year, this thing almost hit S3 and popped significantly. And you can look back in time as well. This thing has bounced pretty nicely off S3 at various times in the chart. We're there again right now. We're there again right now. Like I said, S3 is not a magic level that you just bounce off of every time. It's a very important data point that tells you that the market is significantly undervalued. This is the spot to watch. And if responsive buyers defend, you rotate back to value up above. It could be CVPOC, it can be CVWAP, many different levels. So this is an interesting zone to watch. The fact that we squeezed big here at the previous session and holding at the mid would suggest kind of an inside day with an upward bias characteristic. So if early weakness plays out, can we get a check mark continuation and open some things up to the upside? So this one really solid from a swing perspective, watching that lower area. Another one here, Hindalco. I like this one a lot. I like this one a lot. This one right now really has some compression here that looks like it has the potential for expansion in the day ahead. If not the day ahead, then maybe the next day after. The market structure right now, 880 or maybe 870, very important market structure right there. And to be at that zone right here, and here again, we've seen a bounce and a bounce. Do we see another bounce ahead? If we bust through 900 today, it could be a runaway move to the upside. I haven't really showed off our advanced ADR indicator as much here. This is the pro version as well. Set to 1 day right there. So if we set it to 1 day, we can see what the average range has been over a 10-bar session and over a 5-bar session. So when 5 is above the 10, that means that volatility is increasing right now. And so it's slightly increasing at the moment. If you look at the last 8 or 10 bars, it's very normalized. So it's about 20 points of range. So today, do we get another 20-point move If it's a breakout, I would say maybe it's not just 20, but it could be a 125% move. So maybe it's a 24-point type of move. So there is the potential here to really move. If we can get through 900, it opens up some upside. That could be really, really solid. And again, looking at the lower time frame chart, look at this right here. This compression is significant at these lows. You get a little bit higher through 900 and it really opens up some upside up ahead. Can it break the current downtrend and work its way higher? So really, really liking this one. That could really provide some opportunity down the road from a near-term day trading perspective, but also from a swing perspective. If we've found the low and we're bouncing, it could be multiple days bouncing to the upside. But do we find a low? So today, because you're closing at the midpoint of the day, the previous session, that's a trading range, which means you have to fade the edges. And given the down move here, if you fade the lower edge, you're looking for a push back up. If you come up here and start to reject at the high, then you fade back down. So fading the edges, but if we get a breakout, man, it could be nice. If it's a low with an outside breakout to the upside, there could be some big time strength up ahead. So watching this edge, it's right on market structure right now. And we'll keep an eye on that to see if we get some movement. Let's see. What else is, I think that pretty much hit most of the charts I was looking to get to today. Happiest Minds. This was one that was recommended that I take a look at here. This one looks super, super high volatility and to the downside. One of the things that we talk about here with regards to the bands is the pinching of the bands. So notice sometimes the bands are super wide, and notice sometimes they pinch inward and get very narrow. Whenever they get narrow, I call it pinching of the bands, and that's about the time where you get a big time expansion from that compression. In this case, it got narrow, and look at the expansion down. And this can happen on an intraday basis, on weekly bands, quarterly bands, on yearly bands. And that break to the downside has been relentless. When you look at the bands here from a year-to-date perspective, year-to-date here, look at the slope of VWAP right there, aggressively down. Look at the slope of S3 and R3. When the slope is that aggressive, you have to go in the direction of the slope, which means it's trending down until proven otherwise. Having said that, if this thing can take VWAP bid at some point and stand on top of it, there's a shot to kind of change the trajectory of what we're seeing right now, but this is so bearish. You really, really have to be careful with Happiest Minds here unless we can find a strong low. I would hold off at the moment on this one. But again, you push through that year-to-date VWAP, it starts to open some things up, and a return to break even would be in play at 460 under those circumstances. All right. Well, Titan. All right, we got Titan on here. Let's take a look. Titan right here. Let's look at this one. Thank you for that one. Titan Company. Ooh, really, really nice action. This is something I've been very, very pleasantly surprised with, is the amount of great moving tickers in the Indian markets. Really great movement. I used to call it smooth moving stocks or smooth moving markets. Whenever you get into a good move, say right here, for example, where you have a series of the PivotBoss Bands Pro sell signals at R3 and at the previous quarter's high, that's a trifecta of confluence of factors there that really suggest that this thing is headed lower. That's exactly what you look for time and time again. Look over here. Previous quarter's high, previous quarter's close, R3, rejection, you turn back to value. Turn back to value. And you have a beautiful trading range. It doesn't get much better than that. This is great price action, especially with the tools we have. And look at the overvalued situation here. Now, let's go to current price action, and here's what you get. You get this nice push to the upside that's played out here off the recent lows. I really like this one for a check mark continuation higher from a day perspective and maybe even a near-term swing. You see this midpoint right there? That's your midpoint, that dot between the high and the low. High plus low divided by 2 is your midpoint. That midpoint is at the previous session's high. That's what I call a stop run day through the previous highs. Now, any pullback toward 42 could be a buy the dip for a check mark higher. Check mark continuation. We can measure it out to be about 100 points. So if we pull back to 4,200, it could be a 100-point move to 4,300 under the best case scenario here, right? We've seen about 90 points per day. This one throws the averages off. So if you can get 90 to 100 points of range, that would be tremendous. You're looking for a pullback toward 42 for a check mark continuation higher in Titan. That's it right there. So I am going to go ahead and call it a live stream for today. We hit our metrics for today, which was getting to all these charts, explaining the pre-market framework here heading into your session. Remember, you can go to pivotbossmasters.com/live and use the coupon code India. Use the coupon code India and you'll get your discount. I appreciate all the love and support that I'm getting from India. Thank you very much. Please give me a like, big fat thumbs up there. If you haven't already, subscribe, hit the bell to be notified. Share this with someone that you think would find this useful down the road. Again, I would love to do this more often for you all at various points of time throughout the day. It doesn't always have to be pre-market, but I cherish this time with you all. I appreciate you jumping on with me this morning. Good luck in your session, and I'll see you soon. Take care.